Hey, what's up guys, it's Jonathan here. If this is your first time watching one of these portfolio updates, welcome. With these portfolio updates, basically we do a recap of what happened in the market. I give a recap on the moves that I made in my public account. And then we talk about important things to watch out for next week that may have a significant effect on the stock market. So if any of those things interest you, consider hitting the like and subscribe button, and let's get right into it. So a recap of what happened in the market this week. The overall trend was that the S&P fell about 2% this week. This downtrend started at the beginning of the week on Monday. It amplified significantly on early Tuesday. But starting late Tuesday into Wednesday, the market was pretty flat. But then going into Thursday, the market started to move down even more. And this pattern continued all the way into early Friday. And then around midday, we started to see the market recover some of its losses from Thursday and early Friday. So it turned out that Thursday was one of the best days to buy into the market. Buy a couple positions, and we actually started a new position. And both these buys happened on Thursday. So for those of you who don't know, every week we're buying $10 worth of stocks in my public portfolio. And if you're interested in seeing real time when I make these buys, consider joining me on public. And I have a link down below where you can actually sign up for public and get a free stock. So if you are interested in it, check it out. So in my public account, we made two buys. The first buy was into Enphase. We bought about $6 worth of Enphase at about $150 a share. And like I've said before in previous videos, I really like Enphase. I think once the semiconductor shortage clears up, this company will be off to the races. For me, I'm pretty much willing to dollar cost average into the stock all the way up to about maybe $200. And then at that point, I'll probably slow down on my buying of Enphase. And then the position that we opened up this week was in one of my favorite insurance companies to invest in, which is Lemonade. We bought about $4 worth of Lemonade at $65 a share. And in my opinion, at these prices, Lemonade is a steal for what it's going for. I decided to finally open up a position into that stock. So let's go over the public portfolio. As you can see, the portfolio is at $39.93. And like I said, every week we add $10 to this portfolio. So this big jump that you see here is just the deposit that I made. So for the whole week, we're down a little bit under 1% and at about 34 cents. So like I said before, I just added about $6 worth of Enphase. So now we have about $13.02 in our Enphase. The next stock that we have is Tesla. Again, Tesla for me, I think is one of those companies that will become like the next Apple, at least when you think about stocks. I think it's going to be one of those companies that maybe not as cash heavy as Apple, but I think that they're going to be one of those stocks that one day we'll see become a dividend stock. And I think once EV cars become more popular, they could take over the entire car industry. So now I have about $10.53 invested in my Tesla position. And our average price for that position is $736.38 per share. I did just recently start buying it on this portfolio, but I've been buying Tesla, I'm pretty sure, since it was worth like $50, $60 a share pre-split. So the next position that I have is Google. So this week we didn't add anything to Google, so our position stayed put. We have about $7.70 invested into Google. I really like Google, and I think that I can have a really bright future ahead of it, even though it is one of those bigger tech plays that we don't expect to grow very much. So my next position is in Amazon. I have about a little under $5 invested into Amazon. Like Google, I think Amazon has a lot of room to grow, even though it is a really huge company. I'm definitely looking to grow my position into Amazon when the opportunity arises. Then, like I said before, we just opened this position into Lemonade. We have about $3.89 inside that position. And for me, the thing about Lemonade is that I really like how they're targeting millennials, and they're trying to become a kind of like sticky insurance company to millennials. I think it's a really smart play by them to go that route. And that's the public portfolio there. And again, like I said, if you want to see me make these trades in real time, check me out on public. I have a link in the description down below where if you sign up using that link, you could get yourself a free stock worth up to $70. So check it out. So I have an update for the AMC and GME challenge. So I was struggling on deciding which one I'm going to buy, but I'm thinking now, kind of looking at both stocks, I'm probably going to go with AMC. Now, I made a big mistake and I forgot to buy this week. I'll put it up on the screen now, but I actually did put in a pending order to buy some AMC, and I did promise I was going to buy $120 worth. As you can see from the order on the screen, I'm probably going to end up buying more. So in the next update, I plan to update you guys, and I'll show you that the order actually filled. And one note I wanted to add was that when I do these portfolio updates, I'm not encouraging anyone to buy any of these stocks without doing their own research. It's very important that you have belief in whatever you're invested in. So don't invest just because I'm invested in something. That's not the goal of this. The goal of this is just to kind of share with you guys my experience of investing consistently and seeing the results that come of it. So some important things that we should watch for this week. So Congress did get the continuing resolution signed. So the government is funded, I believe, until the first week of December. So last week I did discuss about that, and I said that's something that we need to watch out for. But now since they've resolved that, we don't really need to worry about that anymore. But one thing we do need to look out for is the debt ceiling and the infrastructure bill. What's happening right now is that the debt ceiling is basically a cap on how much the US government can borrow. And basically right now there's kind of some politics going on, but the Republicans want the Democrats to increase the debt ceiling all by themselves. Right now the Senate is split 50-50, and the Vice President, which is a Democrat, Kamala Harris, she has the power to be the 51st vote that passes any budget reconciliation bills. And what the Republicans want the Democrats to do is to use their reconciliation bill to increase the debt ceiling. But the problem with that is that the Democrats only have one reconciliation bill left, and they want to use that to pass the $3.5 trillion human infrastructure bill. Given that all 50 senators in the Senate aren't on board with the human infrastructure bill, they're not ready to vote on that bill just yet. We're starting to approach the day that we hit the debt ceiling, which is somewhere around mid-October. So it's going to be up to the Democrats to figure out what they want to do about the human infrastructure bill, so then that all 50 senators on the Democratic side agree on it, so they could attach that to the debt ceiling raise as well. And so if you didn't understand anything I just said, in other words, politicians are just being politicians, and they're putting things off to the last second. If we do hear any negative news on these negotiations or getting this bill passed in a timely manner, we may start to see some chest pain in the stock market. But given that President Biden has stepped in to help facilitate some of these negotiations, I think that this is going to get solved before we hit the debt ceiling. So long term, I don't think that this will be a problem, but in the short term, this may create buying opportunities. So look out for that. Since this is the beginning of quarter 4, we're now currently in quarter 3 earnings season. So some of your favorite stocks may be reporting earnings soon. How stocks move compared to earnings is always a very tricky game to play, but the way that the market reacts to earnings may be a good way for you to enter into some of your positions at really good prices. Another thing I think we need to look out for, I know a lot of people may not agree with me on this, and if you don't, let me know in the comment section down below. I would love to have a discussion with you guys about this. I think that Evergrande is still an issue to US markets. I think that Evergrande going bankrupt is pretty much almost a sure bet at this point. But I think that there's a couple of things that people aren't considering that may hurt the US markets. So I'm planning on making a more detailed video about this. So if you aren't subscribed yet, consider hitting the subscribe button and the notification bell so you get notified when I post that video. To summarize things, what we really want to look out for is how the Evergrande affects the Chinese economy and the Chinese markets. That is something that you should look out for that may have some implications on the US markets as well. So that's pretty much it. Thank you guys for watching. Please like, share, and subscribe. Check out all my social medias. And I'll see you guys in the next video. Thanks very much. Have a good weekend.